Hello, I'm Judy Woodruff. Lazard is the world's largest independent financial advisory and asset management firm. It's probably best known for mergers and acquisitions. But ever since Chairman and CEO Ken Jacobs took over the top post 2 years ago, he's put equal focus on expanding the global advisory role the firm plays with key decision makers in governments and institutions. I sat down with Jacobs for an exclusive interview here at Lazard offices in New York City. We talked about the European economic crisis, about the need for the U.S. financial sector to change, and about his company. Ken Jacobs, thank you very much for talking with us.
Thank you, Judy.
Let's just start by asking, what do you see the global economic outlook for next year, for 2012?
A lot depends on how things unfold in Europe over the next couple of months or so. Assuming we get through this crisis without a discontinuity, a break in the markets, a catastrophe, then next year probably looks a lot like this year did. Modest economic growth in the United States, tough economic climate in Europe, and probably a decent story continuing in the emerging markets.
And if Europe doesn't go in the direction that you would like it to?
All bets are off. It's a much more difficult economic climate, and it kind of depends on what happens.
What do you see at this point? You're plugged in all over the world. What do you think needs to happen on the part of European governments, on the part of the European Central Bank, in order to get things on an even keel in Europe?
Well, there's not one prescription. If people are looking for magic bullets, they're going to be disappointed. This is, I think Mrs. Merkel put it very well last night, this is a marathon, not a sprint. The problems in Europe built up over many years. They're not going to be resolved in a matter of weeks or days or weeks or months. What has to happen in Europe is starting to unfold as we speak. We're seeing a couple of things. We've seen a couple of things happen in the last couple of days, which probably start to lay out the path for the next stage of events in Europe. The first is there was coordinated action by the central banks, which I think in some ways addresses a symptom of the problem, which is the lack of U.S. dollar funding for many of the banks in Europe. But it does, while it doesn't get to the underlying malady, it does address a symptom. But more importantly, what it showed is the benefits of concerted action and the ability to have concerted action. But more importantly are the speeches that both Mrs. Merkel made to her constituencies today, and Sarkozy made last night in France. Right. And essentially both made a clear point of laying out how important it is that there is some further fiscal integration and more fiscal discipline on the part of all the participants, on the part of all the countries in the EMU. That, combined with the statements by Mario Draghi over the last couple of days about the ECB, gives some sense that we're moving in another direction.
And I was going to ask you about that. How likely is it, though, that governments will follow that advice?
I think over time they have to. I think the benefits of the euro are so important to every country in Europe at this point in time that there's going to be tremendous pressure to make this work. It's going to be a tough, very difficult period for Europe. The real issue long term is how you get growth back into those economies. But there's a real will to do it because the alternative is really awful.
Lazard has provided counsel to the German government. How well do you think, you mentioned Chancellor Merkel, how well has the German government, Chancellor Merkel, done during this crisis?
Obviously, we can't comment one way or the other on client situations, whether we're involved or not. What I would say is that you put yourself in the shoes of the Germans, and what you have is both a very difficult political and a very difficult economic set of decisions to make. Ultimately, Germany is a very important backstop or creditor to the problems in Europe. It's going to have to step up in a major way for this project to succeed. And to do that, Chancellor Merkel has to be sure she has the political will of the German people behind her. And for that to happen, she has to make sure that the economic project is going to work. And while there's no certainty about that, it can only work if there's increased fiscal discipline and increased fiscal stability on the part of the countries that are going to be aided. And I think that's what she's focused on right now.
I ask because, as I'm sure you know, there are some who say Germany is a major obstacle to getting this crisis resolved.
I think it's. I think the people who are stating that, I think, underestimate the difficulty of the problem, and also I think they're being a little bit, how should I say, impatient about the results. It's complex. It's going to take time. And if you're in the position that Germany's in, where they're the creditor in effect of last resort, they're going to want to be sure that before they step up and do something, it has the best chance of succeeding.
Do you think the monetary union concept is fatally flawed, as some argue? And do you think any one of the 17 member countries is going to have to go back, or is likely to go back to their national currency?
I think as it was originally designed, it probably was fatally flawed. It was essentially an economic union without the political governance to make it work. That's the flaw. And so the real question now is, can you make the political changes necessary, put the governance in place to make the union economically effective? And that's what we're going to find out over the next several years.
Let me just ask you, here in the United States, new jobs report out at the end of the week showing some improvement. How does Lazard, how do you see the health of the U.S. economy? Well,
let's start with the jobs report. I think it's a little difficult to read. It's a little dangerous to read too much into any one report or any one statistic. I think the interesting thing to note is that there's been a number of revisions of statistics over the last several months, and they have trended upwards. That's probably a good sign. Generally speaking, the U.S. economy is okay. We're coming out of a financial crisis, not a recession, not a typical business recession. And I think people's expectations for recovery and growth are probably wildly optimistic for the kind of events that have taken place over the last several years. And so for us, I think that probably means we're going to have a sustained period of time of subpar GDP growth. We're going to be lucky to get demographic growth, maybe a little bit of productivity above that, but that's about it. There's a lot of problems that have to be sort of worked out throughout the economy over the next several years before we get back on a growth chart.
Well, let's talk specifics. Mergers and acquisitions, the outlook here in the United States dropped off in the third quarter this year, not picking up again. What does that mean for Lazard?
Well, let's talk about the M&A market for a minute before moving to Lazard. I think, generally speaking, M&A is a function, the factors driving M&A are threefold in our experience. The first is CEO confidence or board confidence. The second is valuation, and the third is financing. Generally speaking, valuations are reasonable. For large companies, certainly financing remains available, particularly in the United States, and the companies are very well capitalized, very cash rich. The thing that's difficult right now, or the factor that's very troubling right now, is CEO confidence, and that's been rocked by events in Europe and the volatility in the markets. And we won't see that improve until we see the volatility start to come out of the markets. If it does improve, then there's likely to be a resurgence of M&A. And the reason for that is simple. We're in a period of subpar GDP growth, and that's going to persist for some period of time. Therefore, organic growth for companies is going to be challenged. And therefore, the only way to really grow your business and expand your business is going to be through acquisition. So that probably leads to an improvement in the M&A markets as time goes on.
And for Lazard? Well,
look, for Lazard, obviously, activity levels, both in M&A and in the economy as a whole, is a positive for us. So to the extent that the M&A markets pick up, that helps us. We'll do okay in a down market because of our restructuring business and our cyber advisory business, but it's always better to be in a good market than a bad market for us.
Are there more companies now exploring restructuring than there were earlier this year?
I think in Europe, we've seen a pickup in restructuring, obviously a pickup in our sovereign advisory business. In the U.S., it's still pretty quiet on the restructuring front. There's a little bit more activity right now than there was a few months ago, but not that substantial. In Europe, there's a real credit crunch underway, and that probably is going to drive the restructuring business there. Here, the market is okay for financing.
Are there particular industries that look ripe for restructuring for M&A?
For restructuring, I don't think there's, in the U.S., not particularly in Europe, the financial sector is undergoing tremendous amount of pressure, and probably companies that are highly leveraged in Europe as well.
And what about, we've talked mainly about the U.S. and about Europe, but what about emerging markets? Just mention a few countries where you see opportunities and why.
Well, it's interesting. As long as Europe comes through this crisis intact, I mean, without, again, in this discontinuity in markets, and you get the picture I laid out in the U.S. going forward, the growth story in the emerging market stays intact. And that is largely premised on a couple of things. One is commodity prices and oil prices stay reasonably strong. If they do, then many of the countries which have undergone tremendous transformation over the last several years will remain strong. The Chile and Colombia and the resource-rich countries of Africa will continue to make enormous progress. And China and India are just, they are just long-term growth stories, demographics underlying it, education underlying it. They're very good growth stories.
Bringing it home, or looking globally, because you are at what, in how many countries, Lazard?
We're in 27 countries, 42 cities. Last year, year before, I mean, over the last couple of years, I think we've advised companies in over 70 countries, and we probably invest in 80 countries through our asset management business. We're pretty much everywhere right now.
And is Lazard hiring right now?
Selectively. It's, we're always, one of the nice things about Lazard is we're scale. We are about the size we need to be globally. I think the area where we could continue to grow people and really get a benefit from it is in the emerging markets. We're thoughtful about the hiring right now. It's an environment where we're kind of reinforcing our core platforms and building out some additional capabilities as opposed to being very aggressive about hiring.
U.S. financial services sector broadly, how do you think it's changed as a result of the regulatory reforms, regulatory changes that were imposed after the 2008 collapse?
Well, let me rephrase the question somewhat and kind of put it in slightly different perspective. I think it really, the question really is, how has the financial services industry changed post the global financial crisis? Because regulation is only one part of the impact of the global financial crisis. The real change in the financial services industry is going through a secular change. This is not a cyclical event. It's not going to come back to the way it was before 2008. It's a secular change.
Are the regulatory changes that we've seen from Washington appropriate?
Well, politically they are, and they were necessary. And I think from that standpoint, they're appropriate. Economically, that is financially, what this means to the financial system is something that's going to play out over a number of years. I think for the big global financial institutions, they're probably about right. That is, there needs to be some separation of the activities that people do for their own account versus the ones that they do on behalf of clients. Where I think the regulations probably need a review is for the small and medium-sized institutions that really are at the backbone of finance for the small and medium-sized companies in this country.
And so if you stand back and you look at what's happened, that there was this overreach, at least the common perception is there was overreach on the part of big banks, the financial sector. Government swooped in, saved most of those institutions, but no one's gone to jail, and big business, Wall Street seems to be flourishing again. Main Street is struggling.
And that's probably why we have the Tea Party and why we have Occupy Wall Street. There's just a tremendous amount of public anger at something that has not been properly explained.
Do you have sympathy with the Occupy Wall Street movement?
Well, I think Occupy Wall Street, the Occupy Wall Street movement has had two important impacts on the political environment today. The first is that inequality is now on the table. It is part of the political dialogue. And second, when you look at Wall Street, there's a bright light about its activities. And that's probably a healthy thing for our economy at this point. It's not going to be pretty, but it's probably healthy. And I think for Wall Street, what that probably means, it's going to be very difficult to undo the regulatory reforms and the new capital requirements going forward.
And so when you hear the common criticism, Wall Street, the financial sector is out of touch with ordinary Americans, what do you think?
I'm sympathetic. It's also sad because I think Wall Street plays an extraordinarily important role in the economy globally, and to have this happen and this reputation is very unfortunate because that role is going to be compromised. In the end, Wall Street is the gatekeepers of capital. That's its function. It's to effectively take people who need capital and line them up with people who have capital. The U.S. has been better at that than almost any country in the world for many, many decades now. And the result of the financial crisis is going to be to jeopardize that position. And it's going to, in the long run, it's going to jeopardize the economy. But the way it was organized pre-07 has to change.
It sounds like you believe it's healthier if the financial sector is smaller.
Probably yes.
Much of the criticism of Wall Street has to do with the compensation packages for executives, which critics say are just way out of line with what's happened in the rest of the country. How do you see that?
I think it's going to change. I think that the market is going to fix that. The pressure on these institutions to maintain profitability in an environment where they can't use as much leverage as they had in the past to create revenues is going to cause a lot of restructuring of these businesses. And when you restructure these businesses, you really can do only one thing. You can either cut people or you can reduce costs. And reducing costs is either cutting compensation or cutting non-compensation costs. So in the end, it's going to come down to a reduction of compensation.
I think people are frustrated, and the protesters are giving voice to a more broad-based frustration about how our financial system works.
Politics. Much of the perception out there is that Wall Street has turned against President Obama because they see him as anti-business. Is that a fair rap, do you think?
I can't speak for my colleagues on Wall Street. And also, I wouldn't equate Wall Street with business. I mean, in a lot of ways, the two communities are oftentimes very separate. So the anger at Wall Street with Washington may not be as pervasive as one thinks.
Do you think he's anti-business?
No, I don't think he's anti-business. I think what's happened here is we've just gone through a very tumultuous period, and people are really looking for direction and answers. And I think sometimes we expect too much from government, both in terms of what it can do and what it can't do. And I think one of the problems we have in front of us right now is that government is very large. It's a very big part of our economy. We have a government that, frankly speaking, was designed not to work. I mean, you go back to the early days of the Republic, and it was only an argument about how much it wasn't supposed to work, not whether it was supposed to work well. And what we have today is an economy which is much larger than it was when this nation was founded, and a much bigger part of the economy now is in the hands of government, and in a government which was designed not to work well. So I think there's just a lot of frustration.
You probably don't have a lot of time to engage in thinking about politics, but as you look at 2012, have you settled on a candidate who looks interesting?
No, I think it's very early. This campaign has a long way to run. I don't think we know who the Republican candidate's going to be yet. We really don't know how the president is going to position himself in terms of the key issues going forward. So I think it's hard to take a view.
Do you think of yourself as allied with one party or another?
I'm somewhere in the radical center, which doesn't unfortunately exist today.
You do head Ken Jacobs, an enormously influential company. You've managed to keep a fairly low profile. Do you think you can continue that?
I'd like to think I can continue to head an important company like Lazard, and I would like to keep a low profile.
You think that's possible in today's media environment?
Well, look, I think Lazard is about clients, and my greatest value to Lazard is to lead by example, and that means focusing on clients. I'm not so sure the best use of my time in my role at Lazard is to do anything but that.
Well, one of your partners is someone with a decidedly not low profile, Vernon Jordan, the former president of the Urban League, advisor to President Clinton, prominent Democrat. What's it like to work with one of the world's more connected figures?
A joy. Vernon and I have sat next to each other now for, I think it's 12 years. almost 12 years. And I can't think of a person who I've gotten more from than I have from Vernon over that period of time. He's a font of wisdom and an inspiration to all of us.
Personal goal for Ken Jacobs over the next few years?
Do the best I can with Lazard and maintain a nice separation between work life and personal life, to maintain both in a healthy way.
Well, we wish you well. Ken Jacobs, thank you very much for talking with us.
Thank you.
And that's our conversation with the chairman and CEO of Lazard, Ken Jacobs. I'm Judy Woodruff. Thank you for watching. We'll see you next time.